Hello friends, welcome to Talk to the Charts. Today we are going to analyze chart of gold on 1 hour contract basis. For that we'll be using our some of the techniques which are the standard parameters for technical analysis. So the first technique that we'll be using one is trend analysis. So first of all, before we start, the first step that we use while trading or while analyzing our chart is we use trend lines. So we go in trend line, select the instrument, and then create a trend line. So these were the previous trend line which was broken down and the market made a change in a trend. Currently, looking at the charts, we can create a new trend line based on this area, but we don't have sufficient touches at this point of time. While going through a line chart, we have 3 touches right now, and through candlesticks we have multiple touches from like 1 2 3 4 5 6 7 8 9 10 touches, which will be acting as a resistance at this point. So second tool that we'll be using is support and resistance. While creating support and resistance, we go to the horizontal lines and place them the areas of support and resistance. So currently we'll be using removing this old resistance and supports, and I will be teaching you how to create new resistance and supports. So we'll be going and selecting on horizontal line, and at this current phase we'll be looking towards those areas which will be having the maximum touches. So if the current market price is this, and if we look at this area consists of the maximum touches that we can see. And if we count the number of touches, like it's 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15, and the rest goes on. So this shows that this is a strong resistance area at this point of time. Now we go towards finding out the next possible support areas through which, if this resistance is not broken down, the market comes down to its level of supports. So looking at this chart, currently our price is $1755. So let's find out support which is below to the current prices. So looking at this area seems to have the maximum touches, which is like 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18. So this area also shows that this is the maximum touches area which can act as a support at this point of time. So which will be around 1752, which is $3 below the current market price. So now, after using these two techniques, we'll be going on the third part, which is based on candlesticks. So our candlestick currently, which is showing us a bearish candle right now, shows that the sellers are coming into the picture of the market. So currently, looking at this whole bearish candle, we can take sell position at this point of time, and then take this high as our resistance, that is 1757. But we can take, if we are selling the market, we can take this as our stop loss area and then sell the market for the target of 1753.166, as the candles are on bearish mode right now. Now we'll be using the final techniques, that is indicator, for that we'll be using RSI. So RSI has recently moved from the overbought territory, that is around its 60s level, which we have been identifying that most of the time the market get overbought at 60s and oversold at 40s level. So looking at this situation, the market is getting overbought at this level, and it can correct down till its 40s level, which can be around 1748, as well as a minor support at 1753. So for our short-term traders, this overall scenario gives us a sell signal with stop loss of 1756.70 towards the target of 1753 and 1748 respectively. 1748 is for our second support, which comes down to around 1747 or 1748 if we round it off. So thank you for being with us, and we'll be updating you on the further information on any kind of trades that which we will be taking on our live markets, and hope you have a happy learning time. Thank you.